Hey, what is going on, guys? It's your boy Nick. I am in downtown Vancouver right now, so this is probably a lot different from my normal videos. It's pretty noisy around here, so hopefully you can hear me alright. Now in today's video, we need to talk about what just happened in the stock market. Things are getting absolutely ridiculous. Stocks being down 6 to 10% literally every single trading day. So we need to be asking ourselves, is right now the best time to be investing, or should we be hoarding our cash to save it for future dips that will eventually come? So I'll be walking you guys through my mindset, what I'm thinking about stocks right now, what I'm doing in my own portfolio, and how I'm handling this market volatility. So if you do enjoy, make sure to drop a like for the YouTube algorithm, and let's get straight into it. Alright, so obviously another horrible week in the market. Tesla stock down about 6.5%, Shopify down like 8%. It's just been absolutely brutal. But there is one thing that I do want to show you guys, and that would be the fear and greed index. So as we can see, the fear and greed index is now at about 13 out of 100, and this is absolute extreme fear, peak fear that we haven't even seen in the past few months. Now, if we just look at the history of the fear and greed index, it's pretty obvious that this oscillates quite a lot from extreme fear to extreme greed over time. And just last month in April, when we did see that fear and greed index get very negative, I was pointing it out on my channel quite a lot. That was actually when we saw full capitulation and then the stock market turned around. Things have just gotten even worse since then. However, the fear and greed index is a very good indicator for short-term peaks and troughs in the market. So I wouldn't be surprised if we do see a very short-term bull run in the stock market, as we have just seen this horrible downtrend over the past 2 weeks. Anyways, that's just kind of a side note. I know we're all long-term investors here, so we don't really care about what happens in the short term, but basically this is indicating that right now could be a very good opportunity to buy the dip, since we are in extreme fear. Alright, now moving past the fear and greed index and the market as a whole, you guys would know that my top position in my portfolio is Tesla stock right now, and it's getting absolutely punished. Now, to be honest, there's absolutely no news that has come out about Tesla and the reason why it is dropping. Obviously, we all know that Q2 is probably going to be a bad quarter for the company because of the Shanghai lockdowns and then a lot of these inflationary pressures, along with lower margins because their 2 brand new gigafactories are starting up. But in my opinion, this sell-off is simply due to the nature of Tesla stock in general just being a much higher multiple stock, and so anything that's growth related, anything that has a higher multiple above 50 is going to get crushed in today's market. And to be honest, I think we're getting to the point where Tesla stock is extremely undervalued at these levels. As I've pointed out in the past, the PEG ratio for Tesla is at about 0.67. That was before this 20% crash we saw this week, so it's probably at around 0.5 right now for the PEG ratio. So at any point in the near future, when the market recovers, I can see a massive reacceleration in Tesla's stock price. Now, of course, this is not financial advice, but I did just want to point out what I'm doing in the market right now, and I am loading up on Tesla shares. And I would imagine that a lot of us out there, including myself, don't really have a lot of cash because we've already deployed it into the market. We thought the market would have recovered by now, but I believe this is a time in the market when we need to start reevaluating our risk-reward scenarios in all of the stocks that we own. So what do I mean by reevaluating our risk-reward scenarios? Well, basically, all of us have many different stocks in our portfolio, unless we're Steve and Mark Ryan and we're 100% invested into Tesla. And so basically, that gives us the opportunity to start looking at different opportunities in the market that could have better risk-reward potential than some of the stocks that we currently own. For example, a recent holding of mine was Google stock, but I actually ended up selling Google to buy Tesla on the dip just because I see so much more opportunity in Tesla stock over the next 5 to 10 years. I did not sell Google stock because I hate the company, absolutely not. It's just when you consider the risk-reward scenarios between these two stocks, which one is going to have the most upside? Now, on that point, I actually did get the chance to launch a poll on my YouTube channel asking all of my subscribers which stock has the most upside over the next 5 years. Now, the 5 picks in the poll were Apple stock, Amazon stock, Microsoft stock, Google stock, or Tesla stock at all of the current prices, and it was an overwhelming majority that voted Tesla stock has the most upside over the next 5 years. Now, granted, we do have to realize that my channel is full of Tesla investors because I talk about the stock so much, but do keep that in mind. Tesla stock is showing the highest amount of upside. But overall, there wasn't even another pick out of the large cap stocks that would even come close to where Tesla was in this poll. So that is just something to consider. It's not any proof by any means, but it is very interesting. So anyways, to be able to build up some cash right now, I have been liquidating some other positions and focusing more on my highest conviction stocks that I think have the most upside over the next 5 years, is basically what I'm trying to say. And let me know down below if you guys have been doing the same, if you've been liquidating any other positions to build up your highest conviction positions, because I think this is exactly what we should be doing doing as investors during times like this. Alright, finally guys, I just wanted to offer some mindset advice on how to handle this awful time in the market. It's pretty obvious that people are feeling the pain by a lot of the YouTube comments that I've seen around lately. People are struggling handling this market volatility, with the Nasdaq being down over 30% now and the S&P 500 finally entered a bear market today. If you're new to the investing market, this is definitely not something that you're used to handling. It's just been a bull market going straight up for basically the past decade. So I can totally understand your fear and frustration, but you just need to pause and take a step back for a moment and take a look at some of the past recessions. And I want you to tell me what has happened following every single recession in the past: the 2008 financial crisis, the dot-com bubble in 1999, and every single other market correction that we have seen in our lifetimes. It has always recovered. The market has always recovered, and as long as you have a long-term time horizon, you have nothing to worry about. And that's why it's so important that you invest money that you will not need to see for the next 5 to 10 years. Now, the second pointer we can gather from all of these past recessions is that every single time it has been an incredible buying opportunity. The amount of returns that you can produce from a single buy within a recession versus a single buy during a bull market is absolutely astronomical. Many stocks nowadays, especially in the tech sector, are down 50, 60, 70, even 80%. And when there is peak fear in the market, it doesn't matter what is going on with the fundamentals of a company, the companies will still continue selling off, just like Tesla, for example, that absolutely destroyed expectations in their last earnings report. So my final word of advice today, and not financial advice, just friendly advice, that would be to think about the number of shares that you own rather than the value of those shares. Think about the number of shares that you own in each company. So I did just recently create a spreadsheet to allow me to calculate the number of shares that I have across all of my different accounts, and this way I feel much more comfortable about my investments just seeing the number of shares that I own in each company. And the fact is, guys, these market crashes are allowing us to accumulate more shares at a discounted price, so we don't have to pay nearly as much for the amount of shares that we're accumulating in each company. That means you're able to accumulate far more ownership within these companies, and you're able to receive more dividends and more earnings per dollar value that you invest. So yeah, I just wanted to say, focus on the number of shares that you own within these companies and not the specific dollar value. Just because somebody's giving you a quote to sell your house at every single minute in the day does not mean that you need to sell your house at that time. It's completely irrelevant, and over the long term, these prices will be absolutely steals of a deal, especially for companies like Tesla, Google, Trulieve, many of the other ones that I've talked about on my channel, including Amazon. Anyways, I really hope you guys enjoyed this vlog today. I just wanted to get this message out to you very quickly, even while I'm on vacation here in Vancouver. So just make sure to comment down below and let me know what your strategies are in the market right now. If you're building up cash, if you're investing as much as you can, if you're looking at the fear and greed index and you're seeing a huge buying opportunity, just let me know. I would love to hear it down below. And with that said, I will see you guys in the next one.